to Buffett and Munger, they all investing is value investing. They want to buy the bird in the hand, which is worth two in the bush. They want to buy something for well less than they think it's worth. Okay, so the ideal thing in investing is based on the mathematics of common stock investing. So if you buy a stock for $30 and you pay cash, the worst thing that could possibly happen to you is it goes to zero. But the best thing that could possibly happen to you is exponential. So what Munger really brought to Buffett, it moved him away from the Ben Graham buy 200 cigar butts at half the price that they're worth, and through the market's movements get wealthier doing that, to buy a business that is growing over the decades at a time when other people are scared to death or don't understand why it's going to be such a good thing over the next 20 or 30 years. And then enjoy a double whammy, which is the reevaluation, the price that people are willing to pay for each dollar of earnings grows, as well as the earnings number grows. So that really, those two are not really mutually exclusive. So I'll give you an example. Buffett bought Coca-Cola in '89 at about 18 times earnings. Well, I started in the investment business in 1980 as a stockbroker with Drexel Burnham Lambert. And my first stock that I was pitching to people was Coca-Cola, $30 a share. It was at 6 times earnings, paying a 5% dividend. When Buffett bought in 8 years later, he paid 6 times what I was trying to pay for it, but I would be destitute and living in a tent in downtown Phoenix or downtown Seattle if I kept pitching that stock, because no one would buy it. Virtually no one wanted it. Common stock ownership in 1981 was 8% of U.S. household assets. It off the charts low. No one wanted that company. But what Buffett could see in '89 was that the Berlin Wall was falling, and a number of countries that used to be closed were going to open their doors, and the Coca-Cola Corporation was going to be able to sell their beverages to a huge part of the population that they had never sold it to before. And in emerging markets and less wealthy countries, that clean something to drink was very valuable.